What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority. And this is your home show where for almost 9 years we've been providing education and options to you on your most valuable asset, your largest investment, your home. This is your home show. If you're new to the show, welcome to the Gumbo Nation. We think you're going to like it. You're welcome to jump into the pot, show where we're going to discuss everything, providing education and options. If you want to join the show, 504-260-0995, or you can shoot an email to info@mortgagegumbo.com. On the show today, we're going to clear up a couple things. It's easy when we have this show and we get a lot of callers every week. So this week we're going to talk about what is an assumable loan, an assumable mortgage. Sounds easy, right? Hey, that dude, I like that house. That dude's got 3%. I'll just take over his payment. These TikToks and all these things, man, that's what they make you believe. We'll talk about that. Where's inventory at? And what's happening with home prices? And James is that guy, which let's welcome James Parker to the show. James is that, I'm not the I told you so guy, but James is. So we'll talk about that because he'll have some, we've been telling you moments that he'll discuss. And then we'll just, so we'll talk about that and just make sure we're clear of the air. And then rates, man, we told you, and I hope we're on our way. But we had a great move with rates. So we're going to get into what happened this week with, and we told you this was coming, and then, but we also what happened this week with the inflation numbers that came out. Very good, very positive, which, as we've been discussing, interest rates follow inflation. So inflation, we had a great report this week, and we saw that make a move with interest rates. Parker, good to see you, my man.
Hey, good to be back.
So James did some traveling this week. Mortgage Gumbo went on the road, went up to Cleveland, Ohio to see the mothership up there. So proud of what the Ron, the president, and Jen got to hang out with just some absolute executives. Been with the company now for almost 13 years. So it was awesome to be able to go up there, see what's going on, be part of a lot of new initiatives, and it just really kind of take part in that. And, one of the things we mentioned in a couple of weeks, but it's out now is, we've got our CCM Smart Start. We've got a Mortgage Gumbo. What we're offering now is a Smart Start program. And, it's basically a down payment assistance program where if you put up 1%, we'll match 2% or up to $4,000. So great program right now that we're doing that's rolled out. You could use it. Let's say you're going to buy a home, James, and you got your 3% already. Hey, we'll give you $4,000. Use that to buy down the rate. Do a buy down. Put it towards some of your closing costs, stuff like that. So big wins there we've got. And then, just some other stuff that we've got that we'll be rolling out that's going to help our area be a lot more aggressive, right? I almost felt like a senator or a congressman, whatever they called, going up to the mothership and, fighting for my constituents down here, right? Telling them, look, we need relief. We need some different things going on when you start looking at what we're dealing with homeowners insurances and all that stuff. So I'm hoping to get the Queen in the next couple of weeks. So we could kind of talk about where we're at, especially right now while we're right dab in the middle of hurricane season. But Parker, listen, I don't know, how much travel do you do plane wise?
Very little. Since the pandemic, I think I've flown on a plane just to New York and back once.
So, back in the day when I was in corporate America, so to speak, I was traveling a lot. Look, there was 3 years, 4 years where I was on 4 or 5 planes a week, right? Multiple trips. I mean, it was nuts. So did a lot of traveling. And I'm a type A personality, which what that means is I like to kind of know what's up and and what's the one thing, everybody says the great thing they love about flying is you don't have to worry about anything, right? You just sit there. Well, for me, that's opposite because I feel like I don't have any kind of control. It drives me nuts. And, if your flight's delayed, all those kind of things. But there used to be sort of when I used to travel, and this was back in 05 through 20 2009 range, right? Tons, all this traveling, man. And it always seemed like there was almost a sense of pride when you were walking through the airport. And I know it's not like it was back in the days when people wore suits and all that stuff. And so it was a little, flying and especially right now when, you're hearing about all these strikes and delays and everybody's mad and they got these pilots who are, getting into planes who have like, 6 months experience and, get their pilot's license in no time. That weighs on me just because I'm a guy who likes to know everything. I'm not the guy who's like, hey, this is my first surgery. I just wanted to wish you luck. I mean, I know you got to get that first one out the way, but Parker, what's crazy for me is I just don't know what's happened to, and this is not a gripe session at all. I just don't know what has happened to the pride of people when they travel. What is like you'll see those TikToks like the people of Walmart or whatever it is, and not trying to beat up, but dude, that's almost what the airports were like now, man.
So this follows the general decline of our choice of public dress because even when you look at lower strata of society, like people who go to baseball games, when they show like Joe DiMaggio hitting that 57th hit in a game in a row or whatever,
Yeah.
in the background, all the dudes at the baseball game are wearing ties, and most of them still have hats on, a bunch of fedoras and stuff. And so we used to wear suits to go to baseball games. We used to wear suits to go get on a plane. But a couple of things have happened. One is planes became more affordable whenever they were deregulated in the 70s or 80s. It wasn't just Pan Am and TWA and like four different companies. It went from something to the effect of 6% of Americans had taken a commercial plane flight to, in 10 years, 23% of Americans had taken a plane flight. So what you're seeing is plane flight and plane travel reach lower rungs of society where dress hasn't been as important to us getting ahead.
Yeah.
You don't have to dress nice to be a roofer or to lay bricks or to be a radio host for that matter. So that's part of the problem. But generally speaking, even the higher end people dress more sloppy now. And so it's a general downward trend to where I can't see almost anyone wearing shorts and a t-shirt as a grown man in pictures from the 60s and 50s, unless they're at like a beach or something.
Right. So, and I get because look, I'm the wary traveler, right? You're traveling, your flight gets delayed. Look, I got the tie pulled down or maybe off with just the jacket. You know what I'm saying? But I mean, look, and what I look at for that is I go, and look, it's the times, and I'm not beating up on look, change is good. I get it and all that stuff. And it's just I look at some of the kids that are going through these airports having a look at some of these folks. And I wish I was talking about just people wearing t-shirts and shorts. But I mean, it's just the wear, and a lot of it is just it's an embarrassment, and it's almost offensive, but and everybody feels it. You could see normal people feel it, but they're and when I say normal, meaning like there's a couple, maybe a handful of these folks that are walking around through the airport, but I just don't understand, man.
Well, I've heard similar complaints, and I found this interesting. Old timers in Vegas, like that,
Yeah.
family friend who was a promoter, and he had to work in Vegas a lot. But he's from our hometown, and he knew my mom. And he talked about when he first started working in Vegas that most people walking on the strip in Vegas would have on a jacket and tie.
Yeah.
And he's like, that's one of the big downfalls. One of the things I hate about Vegas, and one of the reasons I retired early, is because we now got tank tops on the strip. And that's just unacceptable. Like, it's changed everything it is, because it used to be like, hey, this is a classy joint, someplace where you can go to where you're not going to be bothered by people getting out of control and yelling
Yeah.
cuss words and not tipping and being sloppy and, hey, where's the pool?
Yeah.
Those people. And
Yeah, it's just
general
it's
standards.
it's one of those things, and I don't know. I just felt like like my audience loves that I keep it real, so I just wanted to share that
Well,
kind
like,
of.
you remember in Back to the Future in the 50s when you go pick up your date and you're wearing a tie? I've
Yeah,
never picked up a date in a tie when I was in
yeah.
high school.
No, I know. So, but look, it's also amazing that I could be in New Orleans and then I could be up in Cleveland, Ohio, 3.5 hours later, right? I mean, going through. I mean, so
Well,
that that
what does the top of the mortgage world look like? You're in the headquarters of a major mortgage related industry company.
well, and look, we're the third largest uh lender in the nation right now. So I mean, it's pretty amazing. I mean, it's beautiful. It's downtown Cleveland. It's a gigantic old. It almost looked like one of those buildings in the warehouse district, man, that they convert into like condos. Except this is a big office space, 4 stories, all up to date. Just the newest, latest, and greatest stuff. And just folks busting their tail to make sure that as we're moving through this, we're positioning ourselves to not just maintain during these tougher times, but to make sure we continue to grow. So it was fantastic, and just being on the cusp and being pioneers is what I enjoy. That's what we do here at Mortgage Gumbo. We don't sit back and wonder and wait to see what everybody else is doing. We take some risk and we get out there, and that's why we're continuing to make an impact in our communities, and have now grown to be the third largest lender in the country. So good stuff there. All right, on the other side of the break, Parker, let's talk a little bit about inflation. What did that do? How did that help rates? We'll talk about that in our Tito's Rate Watch. Still to come. Don't fall for that assumable mortgage stuff. We're gonna tell you about that. There's more to it, and really, who I want to help out here is the seller. Don't get duped into this. So we'll talk about that and more. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, 504-260-0995.
Sign said anybody caught trespassing would be shot on sight.
Change it from the diamond to the gridiron, man, today. Soon as get out of here, 7-on-7, Gavin starts. They got, yep, 7-on-7 tournament. What is up? What is up, Gumbo Nation? Glad to be hanging out with you today.
1 minute.
1 minute.
Here we go.
Yep. Lots and lots of money. Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. Hey, if you want to join the show, 504-260-0995 or shoot an email to info@mortgagegumbo.com. Coming up on the show, we're going to talk about what is an assumable mortgage. If we get a chance, we're going to talk about, so you're ready to make an offer on a home? Hey, I'll help you out with some of that process is. And then also inventory. Got a question during the break. Dwayne, you talked about reverse mortgages a couple weeks ago. What are those lines of credit paying? It's 8%. Right now on reverse mortgages, James, if you get a line of credit on a reverse mortgage, you want to talk about where the benefit, the good thing about interest rates going up, it's for our seniors, our boomers, right? If you're 62 plus years of age, and if you want to know, hey, is a reverse mortgage right for you? Let's chat. No cost, no obligation. Like everything we do here, we are a resource for you to find out if it's right. Not to tell you it's right. It's to provide you with education and options. That's been the premises of my entire career for 30 years. And now with Mortgage Gumbo, that is the elevator speech, so to speak. You know, well, Dwayne, what is this show about? Providing education and options on your most valuable asset? Like, we don't need to make it any more than that. And, you know, reverse mortgages is a big thing. A lot of the equity right now. Are you house rich and cash poor because of what's going on? This week closed on 8.1%. They got on a line of credit, James. 8.1. That's good money right there, man. So, all right, let's talk about, James. This week, CPI number came out on Wednesday, and it was fantastic, right? 3%. Good stuff.
Well, I hate to poo on it just immediately, but 3% is not a good number. The target is 2%. I think it should be 0%. Just
I get what you're saying, but at the end of the day, let's look at where we've came from.
But
and
yes,
more importantly,
compared to June of last year, it was at
exactly.
9%.
And
right.
that's what you and I know. That's what we always look at. That's how me and you kind of know if it's going to be good or bad, right? We go pull what was last year's and then what's this month going to be. And we do the year over year and go, all right, hey, we're getting rid of this big number with this lower number. Because if you remember last year, this is when the poop kind of started hitting the fan, right? Last June, last July, I was still closing loans with folks in the fours who may be locked in the end of April or the beginning of May, right? Then this all started disappearing. So that's when everything started, that big push. And we were getting the 0.75 basis point hikes and the 50 basis point hikes. So, you know, the 3%, what I want to reiterate is I want to, again, give credit, and they won't roll with it, but this is proof of like, it's working. Quit messing with it. The data lags. We've been telling you that. And here's proof of a number. I don't know where the 2% number comes from. I don't care. But what I know is this: 3% is closer. It dropped well. It dropped big time. Where are we at from last year? Removing that. Or are we trending down? Now, we can listen. You and I, we all know that things are tighter. right? Hey, people have lost $5,000 per individual. They're saying, year over year, when you take out the extra they're paying for groceries and this and that, it accumulates to about $5,000 more. So I'm not here to tell you you should feel Johnny on a spot. What I'm here to present to you is that's your personal life. My job is why we like this in our mortgage world is interest rates follow inflation. Okay. And when that number came out, we saw rates do some good things this week. Okay. So that inflation number, it holds a lot of water. Now, are they still going to raise rates? Remember, he said, 1 to 2 more hikes. And I'm saying, hey, I hope that means we're at the end. Do we still think they're going to raise rates? They're saying it's over a 90% chance that they are when they meet, not next week, the following week, I believe. So chances are, yes, they are. Which is a head scratcher because to me, I'd be like, all right, let's see what the data is again next month, then make that decision. But it is what it is. This is where we're at. But the good news is, if it continues to be at this trend, as we get rid of some of these higher data points, the year over year measures, James, we should be able to start seeing a benefit with the mortgage rates, right, and the interest rates.
So the backstop, though, of this inflation scenario is something that you have to keep a side eye on Congress and the purse strings for, or it used to be Congress. I guess now you can just spend tens of billions of dollars without anyone having to prove it, just stroke of a president's pen.
Yeah.
But, until that stops, abates, or, we can get the annual deficit down a little bit, this is always going to be an uphill fight, and you're always going to have to keep your other eye on the Fed to see how they're reacting to this. And I think you're absolutely right. We're not shocked that if you bring interest rates up from 0, which is an economic anomaly and not healthy, up to somewhere where that's more historically normal, give the economy a few months to adjust. And we should be pat right here. We shouldn't have to raise rates again because what are we at, like 5.5 now?
Yeah.
Yeah, this is nice and normal.
Yep.
Hang on, chill out. Stop. Yeah. I agree. Stop doing anything just for a minute. You guys are always so behind. And why don't you just look at history and say, let's just raise this to something normal and see if that works? They always have to say, well, we're thinking about doing it a little more next month. Well, why don't you just do it more now? Right. Why would it be a good idea next month, but not this month?
Right, exactly. And that's where, and you're 100% correct there. And look, at the end of the day, all these things, what it comes down to is, are we going to stand pat? But then we go, like you said, you go sign up, the stroke of a pen, and the other things I could tell you that I'm watching is, I hate to say this, but world strife does what to interest rates, James?
They go down.
So
interest rates love strife.
Or we, what's going on over there in Ukraine? I'm keeping an eye on that because I think we're closer than we've ever been to us now being involved in that. And, so what happens there? And that's for everybody, is all of a sudden expenditures and more. I mean, look, and this is a whole different deal, and I just can't, and I know our listeners, and if you have a difference of opinion, please call. I mean, I'm okay with that. I educate me. But like, I don't understand the Supreme Court talks about the student loans and we get all this stuff passed. And then yesterday it comes out and $39 billion. They just said, the hell with it. We're going to waive it. Right. Like, the Supreme Court, basically them having to make payments on paying back student loans. And it had an effect on rates. And because that's the money we just 2 weeks ago talked about, $190 billion a month was going to start going back into the, or was going to come out of the economy because people are going to have to pay student loans. So by doing that, you know what? Hey, now we're bringing back competition, right? Now we start getting maybe some businesses to have to fight for our stuff instead of overcharging you for everything, right? Maybe that car note goes from an average payment of $748 a month to $699 a month. And that $50 that you save there, you now go buy some more groceries. right? Or maybe you help keep that restaurant open. So there's so much out there that this affects, and it's so much more. And that's why we bring it up. And that's why I'm like, let's just try and stay 5.5 right now. We know it came out of nowhere. It hit us like the Tasmanian devil, right? In a cartoon. It came out of nowhere. Yes, we waited too long to do it, but let's just try and stay the course here and see what happens. I said it last week or 2 weeks ago. As Americans, we're resilient. I know us in the Gulf Coast, you're not, there's nobody more resilient than us. And what's crazy is even with mortgage rates, James, people have now almost accepted what the interest rates are, right? Because they're like, I want to be a homeowner. And we've talked about that on this show. People wanting to buy right now, they're brave. And especially in our market, it's more about homeowners insurances and flood insurances and stuff like that. It's not about buyers right now. Yeah, I look forward to being able to offer lower interest rates. But the whole press, what I want you to listen to, Gumbo Nation, is why we keep talking about weight broke the bridge is lower interest rates are going to goose demand. It's going to make you go, all right, I'm in. I'm ready to go, Dwayne. But it's not going to help with inventory. And that's why we've been saying, folks, right now, I'm going to tell you, this week, 3 new folks under contract, not one, James, under list price. We won 2 of the contracts that had previous offers. We won 2 of the contracts because we went in at asking price and didn't ask for closing costs. Not saying sometimes that you don't do that, but folks, we've been saying this was going to happen, and it's here.
Well, you said it on the show last week, and then I saw it again in the Rue newsletter. You should sign up for that. And
hey, that's true. Yeah, if you want to sign up for that, go to mortgagegumbo.com, click on Rue newsletter, sign up. It's free. It's not, what do they call it? Propaganda? What do they call it? Like where I'm trying to sell you a bunch of stuff. It's a weekly newsletter that comes out and keeps you informed.
Yeah, there's no subscription cost. It's just
right.
if you're looking to buy a property, you have a property you're looking to sell, maybe you're thinking about getting a rental or buying a vacation home or something. You think you're going to be swimming in the mortgage world sometime soon. Get in this, and it kind of gets you up to date with regular updates. But 1/3 of all home purchases involve bids above the asking price.
Yes.
And that is a sign that inventory is beyond tight, and it's something that we've had the numbers telling us for a long time how under inventoried we are in compared to what is a air quotes normal real estate market, and that's continuing, and we see no signs of that abating, and there's nothing you can do about that.
Yeah, not when 90% of homeowners that have a mortgage are under 6%. And, it's even more so. I mean, when you're looking at, 60% are under 4. I mean, it's out of control. So, inventory is going to continue to be a challenge. Now, why do our folks win over here at Mortgage Gumbo? We do the pre-approval. We give you the $5,000 guarantee. We get you with realtors who know how to push and how to get that property for you. On the other side of the break, man, I keep hearing about, and I get it. It sounds like it's the magic bullet, right, James? Everybody wants to lose weight. Take this pill and it automatically happens. Well, maybe it does now with some of this stuff, but the magic bullet, everybody keeps talking about assumable mortgage. You keep hearing it, and I get why you are. We're going to talk about that. I want to dial that in. I want to educate you on how that works, right? Because as much as it sounds like it's something that should be being done right now, it's not, and I'm going to explain why. You're listening to Mortgage Gumbo with Dwayne Stein on iHeartRadio, 504-260-0995. Never gonna say goodbye.
And hurt you.
What about some what is Jay-Z? Not Jay-Z.
Fresh Prince?
Fresh Prince.
Yeah. You want that?
Yeah.
Summertime. Summertime.
When it hit, what?
How much time we got? How much time?
Don't know, brah. He might be getting a little coffee too. I think like probably a minute.
Okay. I hear my coffee gurgling to a finish. I'll be right back.
Yeah.
45 seconds. $30.
Yeah. It is summertime. We know that. Look apart. Yeah, get on it, Parker. Hammer it, son. We know that. It's probably today when I get out of here. Hey, the G unit goes from the diamond to the gridiron. We got a little 7-on-7 tournament going on today. So we'll know it's summertime because this is probably this is a 2-shirt day. You know, I travel with a couple shirts, towel, all that stuff on a day like today. Let's get into our weekly segment we like to call Rate Watch. Rate Watch is brought to you by Tito's Handmade Vodka. It's America's first handcrafted vodka. Hey, good news this week. Hey, last week, 30-year conventional. We talk about the inflation, right? 30-year conventional, 7.14. Drop down, James, to 6.89. 15-year, 6.50. Drop to 6.30. FHA, 6.85. Drop to 6.51. Gumbo, 695 to 689. Hit the bell. That's a win. That's in the right direction. VA, 682 to 6.5. And then 5-1 arm, 7.10 to 6.94. Exactly. Good job there, James. Yeah, go get you a 5-1 arm. It's higher than a 30-year conventional right now. That makes a lot of sense. So as we see with but again, a lot of people out there talking about arms, talking about this, talking about that. Listen, that's why we're here, to help educate, to help educate. And one of the key big words, and nobody has to, James, you talked about when rates are at zero. And with that, you talk about the federal funds rate, right? All the behind the scenes things,
Right.
the things that affect short-term rates and stuff. But, let's face it, for the last 10 plus years, when rates were not getting above 4.5%, right? There's no reason assumable mortgages and assumable loans were always there, but who needed them, right? I mean, just go get your own loan, so to speak. So if the rates are the same. So the reason why you're seeing all this stuff on social media and why I'm getting phone calls, hey, do you do assumable mortgages? Let me give you the ins and outs of assumable mortgages, folks, okay? In principle, it sounds amazing, right? Hey, lower your interest rate, your closing costs are capped, long-term savings because you're borrowing less, right? You're buying a $220,000 house, but it's got a balance of 190, so you're borrowing less, and you're taking over an interest rate that's maybe at 3.5 versus a rate that now maybe is at 7. Okay, let's just use that number. So it sounds like it makes sense, but really who I want to talk to a lot right now also is the sellers. Okay, because a few things you got to understand. Not all loans qualify to be assumable. Okay, for instance, James, a conventional loan is not an assumable loan.
Really?
Yes, and you will notice if you read your paperwork, it has a due on sales clause in when you're signing your mortgage. Your mortgage, when you do a conventional loan, has a due on sales clause. So when title exchanges hands, boom, it's got to be in that that loan is got to be at zero. It's got to be done, and it's got to start a new loan or whatever it's going to be, because it's got a due on sales clause.
But
Okay?
I mean, I hate to be so difficult. Is it possible that some idiot may leave that clause out and you could slip into one? Or
No,
yeah, 'cause
I don't know.
they watch all those, right?
Yeah.
Okay.
So that's on a conventional. Now, your government loans do allow the loans to be assumable, and your government loans are FHA, VA, rural development.
Why are they so cool about that?
I don't know. I guess it sounds good, right? I really do not know. And a conventional loan is, keep in mind, that's the government servicing entities, Fannie and Freddie, which before the collapse were private entities, right? Until the government bailed them out, and then the government won't let them out, right? So now they're called government service entities. So that's probably why. But what we got to understand is, while it sounds good in theory, there's a lot of cons to this. And we're going to break that down. And number one, it's you got mortgage insurance, right? Because it's FHA, RD, right? On those loans. You've got your loan options are limited because you can't go get a conventional loan, right? Even though you might have, and I'm going to explain in a second, where you might take over a more assumable mortgage and you've got more than 20% where you wouldn't need mortgage insurance. You got to have it. So there's pros and cons on both sides. But what I want you to understand is this: it's not as easy as taking on a note. Okay? There's two types of assumable loans. There's what's called a simple and a novation. And
I'm sorry, what's that second word? Novation?
novation, yeah.
N-O-V-A?
What's that?
N-O-V-A?
N-O-V, yeah. N-O-V-A-T-I-O-N, correct.
Okay.
So, what I want to do is, We're here to educate, not to make a cool 30-second TikTok to try to drum up a phone call and then tell you, sorry, you don't qualify for it, right? I want you to think of a simple, assumable loan. I want you to think of that, James, almost like a bond for deed, right? Almost like a bond for deed. And sellers, here's why you don't want this. You still assume all the risk on a simple, assumable loan because they're paying the note, but the note's still in your name. And that's why I say it's almost a simple, assumable mortgage is almost obsolete. That would be like you doing it between a family member. But it makes no sense because at the end of the day, you still are holding on to the collateral, right? So you as the buyer may be taking over the payments through a private arrangement that you've made, but that note is still in the seller's. You're a landlord. You basically have a rental property, but not getting any of the benefit unless they default. Okay? Because with a simple, it's very rare, and it happens between you and I. Say, hey, yeah, look, dude, I got to move. Yeah, look, as long as you pay my note right now, James, you can live there. All right, cool. Look, I'll just give you the terms. My note's X amount. Just keep paying that. I just got a cool job. I'm moving up to, headquarters up in Ohio. So just take over the note. All right. Well, yeah, because, now I'm business for self. I don't have any income, and just go from there. The other part that we got to get into is the novation. So we're up against the hard break. Let's get into that because I want to have time to share what that is because that's what people are thinking that they're getting. And I want to explain why it's sort of not as good as it sounds. Okay. So stick around. On the other side of the break, I'm going to finish telling you the ins and outs of what an assumable loan is and why it may not make sense. But if anything, I just want to clear it up, right? This is that education piece of Mortgage Gumbo, Gumbo Nation. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. 504-260-0995.
Man, what were you people on in the 80s to come out with music like that?
What you talking about?
Dude, that's it, man.
We're gonna get in the car and drive to Texas and kick your ass.
You could just say good ones.
Egyptian lover, baby.
What makes you dance all night?
Ecstasy, ecstasy.
I mean, dude, it can go on and on.
Dwayne,
Yo,
historically speaking, according to Freddie Mac, the all-time lowest weekly mortgage rate in the history of mankind occurred the first week of 2021, January 7th, 2021. I bought my house 9 days before that.
how awesome's that?
Luckiest idiot ever.
Yep. The old every now and then a blind squirrel finds a nut, Parker.
It's like closing your eyes and making a free throw.
Yeah.
It's like, hell, I missed most of my free throws. How'd I do that?
1 minute.
Lucky bastard.
Baby girl, you're so fine. Fine.
Here we go.
Yep. Top 5. I mean, if I'm on an island, welcome back. You listen to Mortgage Gumbo with Dwayne Stein right in iHeartRadio. If I'm on an island, Debbie Deb's Lookout Weekend is probably one of the 5 songs I take, because I've got my 5 movies, James, you take, and then that's probably my top 5 songs. So we can get into that another time. Welcome back. Listening to Mortgage Gumbo with Dwayne Stein. So look, we're clearing up. We're educating you right now on what are
assumable mortgages.
Assumable mortgages. What is an assumable mortgage? And this is, again, where you got folks who only know how to sell an interest rate. They don't understand, and they're trying to trick you into believing there's some options. So we're talking about, really, and this is for you, the seller. We're talking about there's 2 types. There's what's called simple and novation. Simple, think of it as just you a homeowner, you agree to let Johnny live in your house and pay the note, and you hope he does what he says he's going to do. But you still retain the title. You may have a handshake agreement, but that title is still, when you have a mortgage on that property, that title is still in your name. So all the risk is with you, the seller. Let's move over into what's called novation, okay? And this is what any assumable loan that's done, this is what happens. And because this requires me as the lender to give consent. So James wants to buy Dwayne's house and wants to get my 3% interest rate. James has to qualify for that.
There's not just like a sneaky wink and a nod you can do where if it's like your grandson is
because I made the loan. I made the loan to Dwayne. You got to keep in mind, I'm a lender. If the house is free and clear, then we could care less. You sneaky winks. If the house is free and clear, you do whatever you want to do. But I entered the agreement with Bank A. Okay, so I've got a contract. I've got a mortgage to pay out 30 years at this, that, and the other. So you've got to understand what goes into that. And that's what I want to talk about. Because
that seems like it takes away a feature of what would be an assumable mortgage, and the fact that I couldn't qualify for a mortgage, so we can get you in if you just assume this one and fill out some other paperwork. But no, you have to pass some sort of lending standards too?
Well, that's where you'd go to a simple or a bond for deed, right? And, hey, I can't qualify. So you kind of get a win because, James says, listen, here's what I'm going to do, dude. I'm going to charge you 4%, pay this note, pay me every month, and then James, you're then paying the lender, right? You're then paying it because the lender's not driving around on a golf cart, knocking on a door on a Saturday morning going, hey, can I see some ID? Right? To make sure that you're James Parker, right?
Teach me my new word of the day, novation. I've never heard this word until today.
That's right. So novation this is what most or any proper assumable mortgage is. That's the term for it, is a novation. That means you go to the lender and you have to get approved, okay, to come through the lender to do the loan. But what I want to make sure that I explain to you is this, and this is why it's such a scam when these people are trying to make you believe that, you're going to get this awesome deal when it's an assumable mortgage. Let's say, James, that you bought a home. Let's say you bought a home and you got, in a $200,000 house, and you got it at 2.5%. All right, you did an FHA loan. We all know FHA, you got to put down 3.5% down. Okay, so on a $200,000 loan, 3.5% down, $7,500. You've been making those payments since January of 2021. You've been paying them like a champ, right? You're making your payments. Everything's fine. When there you come and it's July of 2023 and the rates are a lot higher. And now the mortgage, you've been making your payments. Let's say your balance is $190,000. Well, now the value of the home is $220,000. James, you don't just take over the $190,000. Your down payment is the $220,000 minus what the current note is, current note balance of $190,000. So in essence, your down payment is $30,000.
Which is more than 10%.
Or like saying 13, 14% down. That is why I want folks to understand, don't listen to this hogwash. It's a ploy. It's to try to get you to call. Because if you've got that much money down, let's talk about what these other programs are that we could get you in. Let's talk about that $4,000 down payment assistance that we have right now and help you out. Yeah, the interest rate may be a little bit more, but you don't have to put that much money down. Because think about it, not many people have, to have $30,000 to put down, well, now that's a heck of a lot of money. That's basically paying, James, what are we telling people not to do right now? Don't buy a whole bunch of discount points. That's the ultimate sin right there. That's the ultimate sin. So I'd rather you keep that money in your pocket and go from there. So I want folks to understand, and that is a novation. So again, two types: simple, which is basically a bond for deed, and then novation. But you can't. So when you're seeing all these TikToks and all this stuff about assumable loans, these realtors are getting on. X, we could sell this house to you, and the note's only 3%. My seller, get an assumable loan. It's not going to work. Maybe it'll work. Let's look at where it could work, James. Maybe it works for those people that overpaid for their mortgage, right? Maybe those folks in 20 and 21 who paid $30,000 more than asking price, and they got to get out for some reason, and they got a 3% mortgage. Maybe in that situation, yeah, because the value's catching up to what they paid, then maybe there's a win there.
Yeah, because how are you going to find somebody who doesn't have a significant enough equity paid into their mortgage that it would cost you that big down payment that you just described in your illustration? And so there would have to be just this magic sweet spot of someone, because if assuming someone's lived in a house for a year, they're already going to have a bunch of equity paid up unless they started underwater.
But James, let's take my example where the balance is $190. Why would you, as the seller, if you could get $220 for the house, why would you give it to somebody for $190?
Oh, you certainly wouldn't. And from the seller's point of view,
because that down payment's going to the lender, not back to the seller.
Oh yeah, I guess so. So you would have a chat and say, just go get a regular loan, bro, so I can get my full money. This seems like a sweetheart deal that would only work between family members, assumable mortgages.
Exactly. But that's where and the reason why I brought up the simple first is I want to make sure that family member, what do we talk about when it comes to credit all the time? Do not one of the top 10 commandments, do not co-sign. This is even worse than that. Because now you let somebody live in a house that you're still responsible for. That's the ultimate co-sign.
Wait, question. In an assumable mortgage, whose name is on the title?
If it's a simple, the person that's selling the house, their name stays on the title. You basically are signing a lease. It's a lease.
So that means if someone slips and falls, they can still sue you.
Your name, that's right. That's why the novation has to go through, the novation assumable loan has to go through a lender.
1 minute.
Which is the only way that I would want to look at that. So again, I want you to understand when it comes down to folks watching all this and seeing all this, we can help you with those answers, right? And we provide that. Go to snapsendandsave.com, mortgagegumbo.com, free second look this week again. And why do you want to work with a professional? Because guess what? We wasn't locking people in last week. We knew what was going to happen with this CPI. I've got people that got locked in. They called us for a free second look, over 1% lower on their terms. Folks, your loyalty is to you. Nobody else. And that's what we believe here at Mortgage Gumbo. I work for you. So if you like the interest rate last week, call me. Go to mortgagegumbo.com, click free second look, let's talk. I'll close your loan in 15 days so you can make sure that you get that better interest rate. Like I said, over 1% cheaper. We will help two people out this week and saved over $10,000 in costs.
Now 1 minute.
There's a lot that's going on. Hey, I think we're looking at as the cloud cover, James, as we start to see some of this stuff where we're heading, let's see. Yes, the Fed's going to raise rates again. What is that going to do? There's a lot of stuff out there. We just got to keep our eyes on, and there's one place to come. Hey, like James said, you can go to mortgagegumbo.com, sign up for that weekly Rue newsletter.
30.
Go to Mortgage Gumbo on YouTube. Subscribe there. All these videos, everything like that, 400 plus videos for you to educate yourself. Until next week, Gumbo Nation, keep stir in the pot.
Clear.
Clear.
All right, all right.
Who knew there was so much information about assumable loans, man? Take a segment and a half.
Well, I like the fact that I learned a new word today, and I've been doing this show
I
forever.
was about to say the same damn thing. I learned a new word.
And you got me excited about football season.
Yeah.
Are you ready for some football?
Yep.
My football weenie is engorged.
Dude, I was super cool when I got on a plane to go to Ohio, man. Flew from here to Nashville. Sat a row behind Big John Daly, man, the golfer.
Sweet.
Good
Was he
dude.
drunk? Was he just
Good.
pounding bourbon?
No, man. Good dude. It was early. So yeah, Parker, that's why I kind of reset it so you could figure out what to pull out of there. I reset it when we came back after the into the fourth break. You know what I'm saying?
Yep, I'll squish them together and make it one pretty segment.
Yeah.
Anything else to cover before we go? We're still live,
Yeah. No, not really, man. We'll talk about we could bring this up next week, man. Foreclosures are headed up big time.
Well, I see.
Doesn't that help the news story at the end of the day?
Well, you would think, right? But how much of that is making it down to us, Dave? How much of that is getting to you and I where we can make that offer? That's where your BlackRocks and your all these hedge funds, man,
yeah.
they're buying up all this property, and that's what stinks.
Well, I see many predictions when I was doing research for the show yesterday and this morning, predicting home prices are going to decline. And they've got to start delineating this because home prices are going to decline in downtown Cleveland. I'm sure you saw a lot of vacancies this week. But here, no. Definitely not in Bug Tussle, probably not on the North Shore, maybe in the central of New Orleans, but the houses and stuff aren't.
All right, DeCorbier.
Later, Dave.
Late.
Later.
Let me undo him. All right.
There went Dave.
Yeah. It's not, James. And that's the frustrating part about these headlines. And it just think about it. You have no inventory. And
right. But these headlines are so vague. They are conflating urban with rural, commercial with residential, industrial with all of them. And sure, industrial and commercial real estate very well may face a decline in the major cities, but that has nothing to do with the home prices in Lakeview or the North Shore. They're still going to go up.
Last week, and this is total houses in the entire United States of America, there was 464,889 listings. James, that's in the entire United States. If you even want to get into when you start talking about inventory and then you start breaking down, dude, like how many are ready for sale? How many of these are just people listing their houses that, or your sister and brother-in-law?
Yeah.
who are asking way too much just to see if somebody's going to do it. How many of them are
Tear down.
dumps, tear downs, right? And what people have to understand is, dude, if that's the case, there's millions of homes across the country that are available, right? These fix and flips and stuff that's not for sale that you drive by, but does it mean somebody's going to live in them? No, right? There's reasons why in certain markets and when you're looking at this. But just to give you an idea, in 2015, same active listings that week in the same week of the year in 2015 was 1.2 million homes. So you're a third, 2/3 less now. And you go, oh, well, that was 7 years ago, this and that. Well, guess what? You know, if you go look, that's probably when rates were in the 4s, 5s, you know what I'm saying? And, you know, so there's not.
See, I've been trying to convince Angie and Kenny to buy for 2 years now.
Yep.
They've
Yep.
financially been in a place where they can do it. It'll be tight. They're not going to have the same amount of disposable income they have in their crummy little 1-bedroom apartment. But they would be building equity. You know, 10 years later when they move out of the apartment, they're not going to take thousands of dollars with them, but they will if they go buy, you know, just a starter home in Metairie, by where they live. And they keep saying the dumbest thing. They keep saying, oh, but housing prices are so high. They're only going to get higher. And so
a home is only worth what somebody's willing to pay for it, right?
But
so,
I think they're waiting for this magic moment when home prices fall because they've seen it once in their lifetime, you know, after Katrina and then the housing bubble happened at the same time. You know, that massively distorted market is not going to happen again. Home prices are never going to go down, or I should say over the next 10 years are not going to go down anywhere in your vicinity.
No, I mean, and even in this market, with 7% interest rates over the last year, home prices have stayed the same. If you want to get a headline and you want to give folks credit, you could go, well, home prices have dropped by 0.7%, maybe. You know what I'm saying? Like if you want to, but okay. If at the end of the year, my appreciation is 3%, 4%, well, yeah, when you compare that to 20 and 21, 20 something percent you got in 20 and 21, 8% last year, I'll take that. And it's only going to rebound because when rates get lower, you may have some inventory come out, but dude, they poll these people. I mean, there's no reason for James to ever sell his house. If you move up, if you become a move up buyer, you may keep this house that you have now as a rental because the note's so cheap, right? Because anything you get for rent, James, is going to cover your payment. So when you come to me and go, Dwayne, we're ready to move and buy a new house, you're going to give me a rental agreement that I'm going to be able to waive that payment that you got on that house right now.
Sweet.
The problem where that can't happen right now is I could want to go out and think I'm getting a good deal on a house, but by the time you buy an investment property, you put down 20, 25%, you get a 7.5% to 8% rate because it's investment property. Then where homeowners insurances are in our market, I'm not going to buy a rental to break even.
So I could just convert this to a rental property without having to get a new mortgage?
That's right. That's right. That's where we go back to the assumable, right? All you're doing there is you're just a landlord. You're going to let somebody lease it to you. They're going to pay you. Your note's $1,000. They're going to give you $1,500. And on the first of every month, you're going to deposit that. You're cutting your $1,000 check. You're putting $500 in your pocket. Or you're sending the whole $1,500 off, letting your tenant while they're in there for 2 years while you're building more equity. Letting your equity build up.
So the only difference is I think I would lose my homestead exemption on this house and it would go to my new house, my upgraded house.
Yeah.
I'd rather it go there anyway.
Yeah, but who cares?
Yeah. Okay.
Somebody else is paying that.
Interesting.
So that's the difference. That's what folks have to understand.
I would like to see the Angie and Kenny math over if they had tried to buy 2 years ago versus if they bought the exact same house now. What would the difference in payment be? Because interest rates have gone up. The price of that house has gone up. The insurance on that house has gone up. Probably the taxes on that house have gone up. And so
So, dude, let's do what we'll do is get with me this week, and I'll run the calculations and find out what you think they pay for rent, and we'll do a cost of waiting of if and hey, here's some friends of ours.
Well, we could have her on as a guest. She's on the morning show on WWL TV right now.
Okay, all right.
The traffic girl from WWL Channel 4.
Yeah,
We're going to give her a hard time about waiting.
yeah, yeah. So we could definitely discuss that.
Maybe we'll record it on like Wednesday or something and just have it in the can.
Yeah,
If she
we'll
can't
talk
do
about
that.
that. Yeah.
We'll work that out. Because she's a great example of the cost of waiting.
Yep. But
And-
then listen to this. So you listen to all that inventory, dude. New listings on new homes, right? New listings, brand new. Nobody ever lived in it before. In the entire country, only 58,000 homes. Last year there was 90,000, right? So you're down. I mean, dude, 58,000 homes, new listings. But that's not, dude. So I mean, and that's new home listings. That's not completed. So it's even lower.
Well,
Of how many homes you could go buy right now that you can go to closing, get the keys, and walk in.
my brother-in-law's general contractor, and when lumber prices went to 900, square or cube feet or whatever it is, footboards, I don't know what it is, went up $900. When it tripled, he and all his other contractor friends were scrambling to find wood. It's not that it was expensive. It was like, oh yeah, we can get it to you. It'll be $900 and it'll be here in 2 months. And like, we can't wait to frame a house.
Yeah.
2
No,
months.
I mean, dude, that's wood. Dude, we couldn't do houses. I don't know if you remember, we were talking last year at this time. We had people who were, you got to have a garage door, right? I mean, people were putting a red garage door on their beautiful white house, because that's what they had in stock.
Seen it. And the other one that was a pain was custom windows.
Yeah.
My brother-in-law said you can't get a custom window faster than 4 months.
No, my buddy Dean, who owns Cool View Aluminum and Windows, dude, it's a 3-4 month supply.
So my brother-in-law, had plans. He has lots to make a couple of spec houses, just build them and sell them when they're done. And he waited about 6 months for prices and supply chain stuff to come down because it was a little of both. It was a little of I'm going to pay extra and it's going to take me longer. And if I just wait, I can build a house faster and cheaper, and it would be the same house. And the waiting cost of just holding those notes for a couple more months is nothing compared to the money he saves because lumber came back down. He gambled and won.
And good news, and lucky for him, he had the ability to wait.
Yeah, he just started 2 spec homes now because the price and the shipping lines have come up. But that's multiplied across thousands of general contractors across the country. A lot of them just waited. They're like, this business is a mess. It's a money loser.
Yep.
And I'll just wait.
Yep.
Holding on to dirt's pretty cheap.
Yeah, but dirt isn't as cheap as it used to be either. So, all right, big dog, rolling out, man.
Great show. See you later, guys. Thanks for hanging out.
See you later, Gumbo Nation. Bye-bye now.
Man, look at all these ads that we're about to play and follow them loyally for the rest of your life.